What's going on, everyone? In this video, we're going to be doing a technical analysis on Bitcoin cryptocurrency. So today is April 12th. It is 4:50 p.m. on the West Coast. This is not financial advice. I'm not a financial advisor, so please do not make investments based on what I say in these videos. All right, hit the like button, comment down below how you feel about Bitcoin, how you think it's going to perform, and also hit the subscribe button if you want to follow along on this wonderful journey. So let's get straight to it. A lot of people are familiar with Bitcoin. Maybe you're brand new, maybe you are the best trader in the world. Wherever you are on that spectrum, I welcome you. My name is Jackson Hunter, and I like to mark up charts. Okay, so recently I've been focusing on Solana meme coins, but because we have the halving in 8 days, and it's going to have an impact on the macro crypto scale, I think it's important to focus on that just for a little bit. All right. So Bitcoin had its first halving November 28th, 2012. Second halving was July 9th, 2016. Third halving was May 11th, 2020. And then the fourth halving is coming up April 20th, 2024. All right. So, what is the halving? It basically reduces the mining benefit for Bitcoin miners and it increases scarcity in the underlying commodity, which is Bitcoin. All right. So, the reward for the first one went from 50 Bitcoin to 25 Bitcoin. I'm laughing because that's a lot. The second Bitcoin halving, it went from 25 to 12.5. Third halving, it went from 12.5 to 6.25. And now the fourth one coming up, it's going to reduce the benefit from 6.25 down to 3.125. All right. So a lot of people are talking about this cycle and they're saying it's going to be a giga cycle. It's going to be the super cycle. It's going to be the biggest one of them all. And honestly, who knows who's going to be right? All right. With technical analysis, you're not going to be right every time. I say this all the time on my channel. I'm wrong a lot, but then there's sometimes I'm spot on. And the reason why is because, well, there's a couple of reasons. There's a lot of variables at play. Stocks, crypto, anything with a chart, anything with a price attached to it is going to move on one of three things. And this is like one of the first steps of my trading career. One of the first fundamentals that I learned was that they all move on either technicals, fundamentals, or breaking news. I don't care if that's Bitcoin. I don't care if that's Nvidia stock. I don't care if that's Ponky, Solana meme coin, whatever it is, they all move on those. All right. And it can be a combination of the three. Okay. So trying to predict Bitcoin, like, yeah, you can try and do it. And that's what we're going to do right here. But don't expect it to be right every single time. All right. And technical analysis, I've got to say this stuff in case people don't understand it. Technical analysis, you could be the best chartist in the world, but if you don't know what your risk profile is, your risk tolerance, what your bankroll is, if you're not getting into trades with a solid risk to reward, at least 2 to 1, right? You don't want to be risking more than your potential gain is. If you don't have that down, if you don't have emotional regulation, if you don't know your position sizing, if you don't have a take profit and a stop loss before you get into the trade, then you're likely going to get smoked. And let me remind you, most people lose in crypto in the long term. Like, not everybody's going to win, man. If you're winning on a trade, it means somebody else is on the other side and they're losing. And like, that's just what it is. And honestly, I love it. You know, it's like a sport, but it's an individual sport, right? Like, you can have calls, and I do calls in my Telegram. If you guys want to check it out in the description below, I have a free Telegram channel. We mainly are talking about Solana meme coins. We're having fun so far. But like, calls are just the tip of the iceberg. You got to know how to trade, you know? So calls can help you identify a solid, potentially profitable trade setup. But if you don't know what your take profit stop loss is, your risk profile, your risk to reward, all the stuff that I'm talking about, emotional regulation, um, not having FOMO, you know, being focused on one trade at a time, not being over leveraged, like all these things, Trading is very nuanced, and the way you get good at it, well rounded, is just putting in the time. All right. So I'm glad I'm giving you guys this little spiel before we get started because there's a lot of people online, and maybe I'm guilty of this at sometimes too, because I'm not talking about every trade that I lose. Because honestly, what's the point? Like, why would I tell you, oh, I just got smoked for X amount of money last night? Like, what's the point? Everybody gets smoked and you lick your wounds and you move on. So, my point with that is that everybody talks about their wins, they don't talk about their losses. So it can look like everybody's winning and you're not, but it couldn't be further from the truth. I promise you, dude. Like, even the big accounts you follow, the guys you think are multimillionaires, a lot of them are not. That's just the way it is. That's just the fact of the matter. All right, so let's get right into this. Um, if you guys know me, you know I like to mark up a chart. So let's get started. We have one indicator to the downside. I'm pretty much a naked chartist. I'm not naked right now. I'm wearing my tight, skinny black jeans, studded belt, my Adidas Ultra Boost LA Super Bowl t-shirt. But naked charting just means you're not using a lot of indicators and you're really just going off of candlesticks, just like straight up price action, identifying patterns. So yeah, I might use an RSI, I might use a MACD, I might use a stochastic, I might use a VPVR, volume profile, visible range, but like, and obviously I look at volume, but for the most part, I just look at technical patterns, and we're looking in the past to see if we can project what might happen in the future. All right. Love you guys so much. Thank you for tuning in. So let's check this out. All right, man. If you guys want to get started trading, Bing X is a wonderful platform. I've been partnered with them since 2021. Good people over at Bing X. So if you want to get started trading, you can do spot and leverage. If you're doing leverage, just know that it's high risk. Just know what you're getting into. But it's a great platform. So check them out at my link in the description below, and you might even get a bonus for signing up. All right. So the first cycle, we're going to go back to November 1st, 2012 was the first halving. All right. This is the monthly chart. So each candle represents 1 month. I'm going to go in a little bit more, um, a little more close up, and we're going to look at the weekly. All right. So we're going to wait for this to load. There we go. This is TradingView, by the way. They are the best of the best. So this is a lot of price action. It makes sense why it might take a little bit of time to load. All right, here we go. So the first cycle, these blue lines, these vertical blue lines are from the halving date. So each one of these lines is when Bitcoin halved. All right. So the first time, and people say halving, it doesn't matter. It's just halving. It's because you're dividing the Bitcoin mining benefit in two. That's all you're doing. All right. So from November 26, 2012, it went from $12 to $1,100 in 12 months. All right. So let's break this down. I mean, right here, that's just a bull flag, and then you have a breakout on coinciding volume. You're going to hear me say that a lot. All right. So really nice. Look at that. Look how many green candles there are in a row. Really nice price action. And then you just have a bull flag. It's not that high and tight, which you want, but in any case, it is a bull flag. So we're going to put this, bam, cool. And then you see it broke out July, the third week of July 2013. Had a nice breakout. And then it's going to see this area right here where it got rejected. We know that's an established level, $166 roughly. It broke out of that level. Look at this volume down here. So you see the volume increase. That's a breakout on volume. All right. See, it broke out this level. Bam, smashed through it on coinciding volume. Okay. So sorry about that. We had a breakout on coinciding volume. You see the RSI It dipped down to neutral. This is an indicator that measures whether an asset is overbought or oversold. So when it's way up here above 70, it's overbought and it indicates imminent pullback. When it's down here below 30, that means it's oversold and you're likely due for a bounce. Simple as that. Okay. So I'm not even looking at this right now. You have a breakout of this 166 level on volume. Now, how high does it go? It goes to $1,100. All right. So we know that's a level. And going forward, you're probably going to see these levels be respected because they are established as significant levels. That's funny. You would think it'd be at 1,000. Because round numbers are more established than just a random number like 949. But in any case, that's what you got. You got the peak at $1,100, and then it sold off to 154, which is like what, 90% sell off, 80, 86% sell off. All right. So first halving started at, what was that, $12, went up to $1,100 within 12 months. Now let's see what happened in the second halving. And yeah, I'm going to predict what happens with Bitcoin. Am I going to be right? Who knows? But you got to step up to the plate, right? So the second halving happened on July 4th, 2016. And this one did, what was this one's performance? Cool. $600 to $19,000 in 17 months. All right. Now that first cycle was really easy as far as patterns go. It was just a bull flag and a breakout. So we're going to zoom in, see if our levels got respected. And we'll talk about what happens leading up to the bull run or the halving and what happens after that. All right. So as you can see right here, this is the weekly chart. You have a little bit of a pump a few weeks before, a dip leading into it, a dip again after, and then consolidation, and then your run up starts. All right. So the run up really didn't start till about 3 months after this one in 2016. The run up on the first Bitcoin halving, it didn't start till about the same 1, 2, 3, 4, 5, 6, about 2 months after the halving on the first one. 2 months after the first halving, the price started to run up. This one, it was about 3 months after. So it started running up early October. All right. So look at this. This is what I was just talking about. Price went up to this level that we marked out earlier. Bam, it's not quite. It's at 1143 compared to 1162, not too far off. Went up, got rejected. All right. Sold off all the way down to 750. V-shaped recovery on the weekly at least. And then pushed up, broke through that resistance level, came back down. Look at this. The candles sat right on 950. They sat right on 950. You have a morning doji star formation. All right. So this is just a downtrend. Didn't last too long. Downtrend, doji candle. All right. Long wick at the top, long wick at the bottom. Small bar in the middle. This one's a little bit fatter than you'd like to see. But yeah, long wick at the top, long wick at the bottom. You like the wicks to be equidistant as well. But yeah, in any case, it's still a morning doji. And then you have a solid green bullish candle right after. So that signifies a reversal is about to happen. You have a downtrend, and then you have this morning doji star formation, and then the uptrend resumes. All right. So it broke through this level 1162 and then just shot up. You have this is the next level. Bam. We're going to call it 3000 because traders are psychological. And look at that. This one wick down. So, all right. Price came up to 3000, sold off to this level at 1900, pushed up again, broke through that resistance level at 3000. Now this time we have a level at, it's going to be right here, 4600. Sold off to this previous level. You see what I'm talking about? So it bounced right here where this was the resistance before. Old resistance becomes new support. All right. Old resistance becomes new support. Remember that. And vice versa if you're talking about a downtrend. Old resistance becomes new support. If you're doing a downtrend, you're going to have old support becomes new resistance because the support level will fall out. All right, it breaks and then it bounces to retest. And now it's going to be a resistance level going down. And a downtrend, I know I'm throwing a lot at you guys, but don't worry, you'll get it. So an uptrend is this. It's really simple. It's a higher high, higher low, higher high, higher low, higher high. It's simply a series of higher highs and higher lows. All it is. Higher high, higher low, higher high, higher low. Simple as that. Downtrend is just the opposite. Lower low, lower high, lower low, lower high, lower low. Lower low, lower high, lower low, lower high, lower low. Simple as that. All right. So where were we? We're in the 4K region. Price ran up to this level. It got rejected at 73.50. Look at that wick down right at this level. Got rejected right here, 73.50. All right, now we're establishing some legit levels. But in any case, Bitcoin said, fuck that. We're going to go a lot higher. So it didn't stop at 73.50. Ran up to, it actually ran up to almost 20,000. But that resistance level is 19,000, pretty much on the dot. All right. So that was the height of the run up after the second halving, and then it sold off. You see a big sell off. No big deal. 84%, really similar to that first one, which was I think I said 86%. All right, then just kind of consolidating within consolidating, but not making the same magnitude of moves as this one from like 600 to 19,000, bouncing between 37 and like 12,000. And then you have the third halving. All right, this is May 11th, 2020. A lot of people made money in this. I was not even trading crypto. I didn't even start trading yet. I started trading in October of 2020 on Forex. And then I started trading crypto on leverage. I was trading Litecoin like every single day on like 50x. That was pretty insane. And then I started trading options in the stock market. So this is the third halving. All right, May 11th, 2020. Price went from, I have it up here. So price went from 9,000 to 69,000 in 18 months. All right. First halving, $12 to $1,100 in 12 months, $600 to 19,000 in 17 months. Third halving is $9,000 to 69,000 in 18 months. And then we're going to make a prediction, same thing, of what's going to happen after this halving, which is coming up in 8 days. All right. So this is the full rundown of Bitcoin's price action on a macro view. Obviously, we could open up the 4-hour, the hourly, the 15-minute. We can go as low as you want, to be honest. But if we're trying to really put probability in our favor, we want to look at a higher time frame chart. So that's what we're doing. You can see this dip down a few months before. In February, it dipped down. Let's see what it do. Quite a lot actually. 61% pullback right before, and then it ran up into it, consolidated for 2 months, May to July, 2 months, and then it started running up. Look, it found, I mean, it didn't really get rejected at this 11K, 12K region. Broke through, found support. Old resistance becomes new support at this level right here. All right. So multiple times got rejected. Right here, it's support. Right here, it's resistance. Right here, it's resistance. That's a false breakout. Right here, it's resistance. Then it breaks through, reclaims that as support. That is textbook. All right. I'm going to break this down again. This level, which is 9,800, we can call it 10K. This level acts as resistance. No, first it acts as support right here from June to September of 2019. Acts as support. After that, in late October, it acts as resistance. All right, price bounces off, then goes to the downside, does a correction. Now it comes up again, does a false breakout, barely goes above, gets rejected again, gets shot down like 60%, acts as resistance again, and then it did a bull flag right here. And then it breaks through. Look at this volume candle, volume bar, excuse me. Way bigger than anything else before it, right? So it is a breakout of a bull flag on coinciding volume, and you're flipping 9,800 now as support. All right, so it goes up, retests as support, and then it goes on a hell of a run from 9K to 69K. You had this first stop, which is where we're going to break down to the daily. And may I remind you, this is when COVID was going on. So everybody was stuck in their house and they're like, how am I going to make money? Oh, let's try crypto. Cool. That's where a lot of this cash infusion came from. Okay. So check this out. What pattern is this? This is a bull flag. And like, here's the thing, if the pattern doesn't jump out at you within seconds, it's not the right pattern. 99% of the time, you don't have to search far and wide to find the pattern. All right. So it should just come to you. Like these levels, I'm drawing them very fast because they're obvious. All right. You have the price stopping out right here, stopping out right here, stopping out right here. You need 3 touches. All right. 3 touches minimum to establish support and resistance levels. 3 touches. So once, twice actually right there. 1, 2, 3, 4 times it touched. To the top side, you have once, twice, 3 times, 4 times, 5 times. So you're good. That's an established level. We know that's a level that price is likely to abide by in the future. All right. So this is just a bull flag. It looks gorgeous, to be honest. This is the flagpole. Bam. See how it looks just like a flag? And you want it to be high and tight as possible. All right. I learned that from Thomas Bolkowski, technical analyst. He has a great website you can learn so much from. You want your bull flag to be high and tight because otherwise it's honestly not that dependable of a pattern. So you have this breakout. Honestly, it wasn't on much volume. If you look down here, there's like 1 day of significant volume, but other than that, it wasn't really a huge increase in volume. And then right here, you're just seeing an uptrend. All right, higher high, higher low, higher high, higher low, like what we were just talking about, higher high. Failed, yeah, you got a higher low right here, but failed to make a higher high than that. That's where it topped out at. Bam. All right, topped out at like 64K, maybe 65K. But that's the wick. It wicked at 65. The actual candle bar was 64,000. You'll notice I like to be really specific when I need to be. All right, so it did a huge double top. This is the first top in April 2021. This is the second top. Now, yeah, it went up a little bit higher. It hit 69K, perfect number. And then you have the neckline of this whole thing right here. Bam. So I'm going to keep these lines even though they're a little bit distracting right now. But it's all good. Delete this stuff. Cool. So we're just looking at a double top. That's all it is, man. Price came up on this is the daily chart. So each candlestick represents 24 hours of price action. You have the first top right there. And then second top, basically the same level. It's going to be 6% higher. Yeah, whatever. Neckline is down here at 29K. Call it 30K, whatever you want. Look, it acted as the bounce point for that bull flag. It acted as the neckline. And then right here on this downtrend, it found support, but that's just a rising wedge, man. A rising wedge is a continuation pattern in a downtrend. All right. That's all it is, man. Trend line, rising wedge. Look at that. It's really simple. Super simple. Bam. Broke down on significant volume. Actually, look at that right there. Significant volume. Found support at the level that we drew earlier, which was 19,000. And now we have this run up coming up into our subsequent Bitcoin halving, the fourth one, which is going to be on 4/20/2024. What's up, little dude? That's my German Shepherd, Baker. Yeah, in a few minutes, okay? All right, so we have a rising wedge. So let's pull it up on the weekly first. So you have a pullback from this double top because it broke through the neckline at 29K of 77%. So 77% sell off from the high of 69K after the third halving, the most previous halving. And now we're running up into the fourth halving. All right. Remember that after the first halving, it was a 86% pullback. After the second halving, it was around there, 80%, something like that. And now this one was a 76% pullback. All right. So since that local low, it's already ran up 377% from 16,000 to 70 something thousand. All right. So this pattern on the weekly, you can't see much, but on the daily, it is a rising wedge with a false breakout at the all-time high of, what is that, 73K? All right, cool. So this is a bearish pattern. After an uptrend, if you have a rising wedge, which this is exactly what it is, this price action right here, this stuff, that's a false breakout. All right, so you have one touch point, 2, 3, 4, 5 to the downside, 1, 2, 3, 4, 5, 6 touch points to the top. All right, so we have this bearish pattern entering the fourth halving. So this is what I think is going to happen, and who knows? Disagree with me in the comments, agree with me in the comments. Insert a new perspective that I might not be aware of. Let's share with each other, because although trading is an individual sport, I like to learn. I'm constantly learning. I'm constantly looking at charts. I'm constantly reading what my peers and my mentors have to say about certain price action. So I think this is going to be a rising wedge. Well, I know it's a rising wedge, but I think it's going to play out as a rising wedge, which is a bearish pattern after an uptrend. All right. After a downtrend, it's also a bearish pattern. It's a continuation pattern. But when you have a rising wedge after an uptrend, it is a reversal pattern. All right. So I think price is going to, and this is not going to be drawn to scale, but I think price is going to do a bit of a drawback going into the halving. And then I think it's going to consolidate for a bit. Again, this is not to scale for price or time range, just what I think the pattern is going to look like. I think you're going to have a pullback followed by a consolidation, and then watch for a reversal pattern like a inverse head and shoulders, the neckline right there, or a double bottom, or a triple bottom, neckline, neckline. You could just have a V-shaped recovery. You could have a rounded bottom with the volume higher in the beginning, then it lulls, and then it spikes again. All right. So I think you're going to see price action pull back, consolidate for a bit. I don't know how long, I don't know how low it's going to go. Do a reversal pattern and then continue upward. Now, how high do I think Bitcoin is going to go? This is the fun part. Here we go. So I've been studying Solana meme coins for a few months. I have not been studying Bitcoin that much, to be honest. But I do think Bitcoin is going to become incredibly popular, because the US dollar is just becoming worth less every single day. I mean, there's nothing backing it. We print so much of it, it's insane. Of course, it's going to lose its value, right? If you keep creating more of something, you see it all the time, it's not as valuable to you. It's as simple as that. So I think I'm going to give you a range because, again, I've not been studying Bitcoin that much. But I'm going to give you a range. I think it's going to go between, and I don't know when, but I think it's going to go between 100K this cycle. It could go higher after this, but in this cycle, I think it's going to go between 100K and 250K. Now, why do I say that? 100K never been touched before. That would be an all-time high. 100K is a round number. It's a number that's like, you can put that on the news and it's a pretty number and it makes sense. Traders are psychological. They want to see Bitcoin hit 100K, at least the maxis, at least the pro crypto people. It's a round number. It's the next goal in sight. You don't say, oh, we hit 73. Let's hit 84K. That makes zero sense. All right. So people want to see it hit 100K, and trading is a self-fulfilling prophecy. I see it repeated over and over and over again. All right. What you want to happen will happen. I promise you that. So 100K is just a round number. It's easy on the eyes. It's the next target, ubiquitously recognized. All right. Now 250K, to me, I mean, you could say 200 would be the next like obvious number because it's the next round number. But I like a quarter million. I like a quarter million. I like the sound of that. So I think I think a lot of other people do as well. So I think where Bitcoin is going to land is somewhere between 100K and 250K. I'd be very surprised if Bitcoin didn't break into six figures. And so that's where I see Bitcoin headed. I'll keep you guys updated. I'm not sure how frequently I'm going to make these videos, but I do enjoy charting up things. So if you have any recommendations, you can email me. It's in the link in the description below. You can hit me on Twitter. I'll have my Twitter in the description below as well. I'm here to help. I love talking to you guys. But if you have like anything, a meme coin, an altcoin, a stock, even though I don't trade in the stock market anymore, if you have anything you want me to look at, I will be happy to do so, and maybe I'll even make a video on it. So thank you for watching all of this. I think Bitcoin is going to go between 100K and 250K. I think you're going to see this rising wedge perform a pullback into consolidation, and then your bull run of 2024, 2025 is going to start. How long will it last? I have no idea. Maybe I'll have a better idea of that as time goes on, as we all will. But that is what I have for you guys today. Thank you so much for watching. Hopefully you learned something, and I'll see you for the next video. Peace.